inflation in November was 2.7%, up from 2.6% in October. And that's a year over year measurement. The target inflation rate in the United States is 2%. Where it's good is interest rates are going down. Now, the interesting thing about interest rates is that interest rate that you hear about, the Federal Reserve, is a short-term interest rate. So the prime rate, which is usually what establishes a lot of business lending, is oftentimes derived heavily from the Federal Reserve's interest rate. But there's another component that drives interest rates, and that's the 10-year Treasury bond. The 10-year is really a measure of how confident the market is in the long-term economy. The 10-year Treasury note has been going up because there's less confidence, right? Inflation is sticky. They're not going to have as many interest rate cuts. And so the Federal Reserve is having to charge more interest to get people to buy their bonds. And that's going to drive things like mortgages. And so you've got a mixed market, right? So how does this apply to a brand? Well, if you have lending, there's a decent chance that your cost of loans will go down, but other areas may go up. So you may have, if you're trying to get a business mortgage, it may continue to be expensive.